we got a special treat here on Friday, right on the open. We have Sean Udall. He's the tech stock strategist, and he wakes up early to join us. How you doing, Sean?
I'm doing good. I'm doing good. How are you guys this morning?
Doing good. Well, I gotta go. I always give you kudos on your good stuff. I gotta get a GoPro update here. And I know you say I like when it goes down because I can buy more, but you're starting to get, starting to have some second thoughts on this one.
No, in fact, I think I made my last buys on it this week, right around $38, 38.50. So I may do a little more lower, but my guess is this thing's about ready to get a little squirrely to the upside. And I got a pretty good feeling I made my last buys on it this week. So it's kind of looking like the typical stock where it goes through kind of that shock phase, then panic phase, then apathy phase. So I think the last week or two we might have just seen the apathy phase on it. So we'll see what happens. But this is not, I just full disclosure, I don't view GoPro like a Twitter or a Facebook of old or a Google of old or an Apple. It's not. I wouldn't call it a top 5-10 position certainly, but I like it for mid-size size. And in fact, now Joel, I'm probably going to be looking at 45 strikes on it. But probably I get to a point where I won't buy really much more common.
Right.
And if I do want to increase exposure, I'll use it. I'll use options. So if it does kind of sit around in here and hold for a while, it'd be nice if the call premium got even cheaper. But probably my next targets are going to be kind of cheapy $45 calls.
How much time you giving yourself?
Oh, on GoPro, since I don't know exactly when it's going to work, I'd have to do at least monthlies or 2-month options. Strategy in the past have worked for me really well. In fact, I did this with Apple and I did this with Facebook when it was sort of a hated stock, because I actually did leaps because the call premium on the leaps for those two particular positions where they were really, really distressed was very cheap. GoPro leaps, the interesting thing, in fact, here's an interesting thing some people might want to look at. I kind of use this sometimes as a tell. If near-term options are relatively cheap, but long-dated options, say 6 months or longer, are still exceedingly expensive, sometimes that's a tell for me that the option market is sort of telling you it's a possible predictor of where the price might go. And so far, I have not really seen the leaps on GoPro cheapen up nearly as much as you think they would, given the fact that the stock's gone. I mean, I got interested around 50 and below. Given the fact that the stock's gone down 10 to 15 points in 3 to 4 weeks, I would have think those lead prices would have collapsed more than they have.
Huh, that's an interesting point here. Let's go to the big dog, Apple.
Sure.
What do you think about that? Are you buying an iWatch, Sean? Be honest with us.
I don't know. I don't know if I will buy it the very first day. Here's my thesis on the watch. So, by the way, here's what I've done on Apple more than anything. I've bought a lot of calls that I wrote on it. So my main trade on Apple this week have been sort of relishing the fact that I've been able to buy calls back at 0.15 to 0.35% of the total premium price I collected when I wrote those calls. I think the last time you had me on, I was saying, hey, I like a lot of my stuff still. I think there's plenty of names that have upside. But I was kind of feeling a fair amount of froth in the market.
You did.
And I even said Apple
Yep.
Apple at 130 plus was frothy short term. So what was I doing? I was writing calls. In fact, I wrote calls on, I think, about 65 to 75% of my stock positions, 1 to 2 or 3 weeks ago. And in this way, in fact, I bought all my Apple calls back that I had written. I bought a few. I haven't, I think Apple maybe is in a little bit of no man's land. As far as the watch, though, that was your direct question. I'm not so sure I'm going to buy the very first one, but I know who I think who will are millions of females. So I think this thing is going to sell exceedingly well with the female persuasion of the population. I think guys are going to be maybe tepid at first, but I think it's going to have what I call you see it in the wild effect. So I think people will be somewhat tepid. I'm kind of low. I mean, for a big Apple bull, I'm like at 9 million units 50 million units on the Apple Watch first year. I kind of think I'm going to be right, and a lot of the there's a guy out there with think it's going to sell 40, 45 million units first year. I almost think that's in the kind of ludicrous camp. So I do think that this will be a product that generates a lot more traction 2, 3, 4, 5 quarters out. I think people will get to understand it. I talked to your guy Lewis, and he featured me in a piece a while ago, and I said I thought the watch would for sure become Apple's third best-selling product in time. So I think kind of a year out plus it'll be Apple's third best-selling product. We'll see what happens. We'll see this medical research kit. In fact, Cook was on with Kramer last night. He talked about this a lot. You know, that my whole thesis of the watch has really been about health, fitness, in the medical monitoring market. And the medical monitoring or medical technology market is sort of a nascent market in the world of technology. It's funny. It's the medical industry seems to be super, super advanced, and there's lots of science. But when it comes to deploying technology to make that industry more efficient, it's sort of like it's 10, 20 years behind the rest of the world, but it's starting to catch up very rapidly. So if there's a huge bull case for it, I think the medical angle is that's your bull case for Apple Watch long term.
That makes perfect sense. Let's just we'll touch on the overall market. You were on I don't know if it was a week or two ago. You were a little hesitant about the market. You had a sell off. You had a nice rebound yesterday. Financials led us higher. Kind of giving it back today a little bit. You think that was just a little bit of a false bounce yesterday with the financials and the stress test, and we're heading back lower to test the lows of the move, or was that it? You missed the buy the dip. That's it. Time to get long.
I do actually think it was a good buy the dip. I think we're going to be in more chop. We got a Fed meeting coming up. We got some other things coming up. You always get chop in the 2 to 4 weeks preceding the next quarter of earnings reports. So let's just, in my mind, earnings starts around April 20th, right? April 15th to April 20th. So I wouldn't be surprised if in the 2 to 3 weeks leading up to that, that's when you get some pre-announcements or some people worried about pre-announcements. At the same time, usually you get one big surge before that period. So I kind of think the market's stuck. I think we're stuck in a trading range for the next couple months. I would be a bit surprised if we moved 3 or 4 or 5% higher than where we are right now. I also wouldn't be a bit surprised if we did that same magnitude move to the downside. And I do think, like Apple 122 was a pretty good nip. Twitter 46 was a pretty good nip on the long side. Certain FireEye under 42 was a good nip on the long side. CyberArk, by the way, might set up. I'm toying with that one a little bit. I would love to see that thing break 50 in high 40s. I'd be all over it. Or if it holds here and starts a resurgent move to the upside, that would be a name I'd get pretty interested in. Put it this way.
Did you ever get a short off in that? Because I remember we were talking about it, and you were like, 55, I don't know about 55, I don't know about 60, and it got to 65. Did you ever take a stab on the short side?
I did. In fact, you could look at a public tweet. I bought puts on the Friday that hit $70, and I basically said, this is it. This is ridiculous, ludicrous move, blah, blah, blah. I bought puts. I literally was out of those puts. It might have been the next Monday. If it wasn't the next Monday, it was Monday and Tuesday. I took them off. Now, I kind of wish I would have stayed a little more, but it's been a squirrely name. I mean, it flashed down to like 55, recovered all the way up to about 63, 64. The secondary price that said. By the way, so here's a mini thesis on CyberArk. That whoever is running that company is very smart in dealing with the financial markets, and here's why. They got a 5.3 million share lockup coming on, I believe, the 23rd. So that was the negative catalyst, right? That's the thing on why I felt confident buying puts at $70, and it might have been 69 and change, by the way. It might have been like 69.82 or something, but we would call it 70. The bottom line is. Now they priced the secondary of, guess what, 4 million shares with an option to increase it to 4.6 million shares. The lockup's 5.3. I think they're doing a very good job of kind of pre-selling the lockup,
Yeah,
a few
exactly.
days before the lockup. So this is could where if you look at how FireEye managed their secondary ahead of
Oh,
their lockup and their whole lockup experience was basically an absolute nightmare. I think CyberArk is managing their lockup period exceedingly well. So that could be a very good tell about how smart the management of this company is. They already have a good product. The product's selling really well, great growth. But I tell you what, watch out for companies that operate this way because, I mean, if people get too bearish on this thing and think this thing's going to go down to like, some all the way retraced to like 33 or 38 bucks, I think they're going to get slaughtered.
yeah.
So I think this is definitely one I'm going to be looking long on, either on a stability and break above move or really high 40s. I'd be all over it.
FireEye, I remember that. That was back in March of April of 2014. The stock had a parabolic run, and they just jammed the shares down. I mean, it coincided with like a day or two of its all-time high. They just jammed
That's
it.
right.
Yeah, yeah, that was. I remember that. That was something. You rigging the cash register in Ring Central, or is that something you're still sticking with? It seems like had a little bit, made a new high, a little bit of a pullback, running into problems at 16. Is that you selling at 16, Sean?
I might have been. My last sell was right around the time the kind of the post earnings spike. That was my. So I haven't done much on it recently. I'm kind of you always either want buys or sells, right? Well, sometimes holding a stock is okay. Right now. I'm not really a buyer or a seller of Ring. I think low 20s, 22, 23 area is achievable. And I think it's just a good hold. 14, 14 or lower would probably be an area where I'd look to pick some up. I'd probably be a kind of a net seller above 17.50, 18. But right here, for me anyway, it's a no man's land.
Okay,
I'm
and
just holding. I'm just holding it.
anything on your buy radar here? Anything that I mean, we talked about the GoPro and Apple. You're covering some calls, short calls here. Anything else on the buy radar?
Nimble storage for sure. In fact, the other day I'm kind of kicking myself that I did hit this thing a little more aggressively in the 23s. So
What's the
that's
symbol? Symbol
NMBL.
NMBL.
Yeah, NMBL. In fact, they had a good earnings. They didn't have a great earnings report, but they had a good earnings report, and they killed it. And this is another one of those stocks, where, I mean, if anybody sniffs this thing at all for M&A, it's instantly worth $30. And I just don't. It's kind of like Ring. Remember when I said how Ring had basically never missed an earnings report?
Yep.
Yet it had been treated like it missed 2 or 3 earnings reports. And Nimble isn't quite as ridiculously cheap as Ring was between 10 and 11, but Nimble between 22 and 24 is sort of like Ring at 12 or 13 probably. That'd be a good way to think about it. So it's not in that perfect maximum conviction sort of cheapness zone that I like, but let's call it in the bottom quartile or bottom quintile in sort of my valuation range, which I like. Workday is another name I like. I talked about Twitter a little bit. I talked about FireEye. Of all sort of the mid cap tech names that had a great earnings report,
Ooh.
that it has now worked off kind of a massive sort of overvaluation condition, and even an overbought condition short term is Workday. That's WDAY. So
Yep.
that's a name I like. Another name, this is a name I don't love fundamentally, but the chart looks really good to me for a bounce, is Yelp, YELP. So, that's another, it's kind of what I call a forgotten love fest stock. Like that was another one where people got way too overenthused about it. The stock, I have zero idea how anybody justified buying the stock above $80. But now at 47, if the chart does what I call my early turn technical trade. So, let's say you kind of identify a couple price points, you start getting some momentum, you break some kind of lower end Fibonacci levels and stuff like that. This thing I think could work to the upside.
All
Because
right.
there's a lot of names. Oh, go ahead.
No, I'm just saying it's we're coming near the end of the show. We've been on with Sean Udall. He's a tech stock strategist, and he joins us whenever we call him. And I can't tell you how much I appreciate that, Sean. You get great insights into the markets, and you're always available. Thank you very much. Have a great trading day, great weekend, and I'm sure we'll be talking to you again soon.
Thanks as always. Enjoy the weekend, you guys yourselves.